Hey, welcome back. Lululemon has quite a lot of potential. They are in the middle of an international expansion during a time that should soon be very beneficial. When we see rate cuts boosting the discretionary budget and consumer spending, they have the potential to keep delivering very good results. In the latest report, they missed the revenue target and even cut the outlook due to the environment, but the stock was up a bit. We saw this trend especially with Nike, which has much bigger issues, but we'll get into that later. We can see the Americas being pretty much flat, similar to Nike overall, but international had a 29% increase. And keep in mind that this is during a time with high interest rates, inflation, economic uncertainty, and so on. When we get rate cuts, which are meant to stimulate the economy, we might see some growth in the Americas too, which can be what the market needs to gain some confidence. They have a plan to reach about $12.5 billion in revenue by 2026, basically doubling it since 2021, and they are currently on track to achieve it, especially thanks to international expansion. They made almost $1.7 billion in cash flows, placing them at a ratio of around 19 as I'm recording this, so actually a bit below Nike. That's despite having much more potential to grow and not being in a stage where they focus on producing cash flows. Again, due to the expansion, the capex is significantly higher and we can see them opening quite a lot of stores. Overall, they have a very good profitability grade from pretty much any ratio you can think of. Even the growth ratios are many times above the sector median, even if some are below the company's average. Nike, in comparison, has even half of Lulu's margins, so if they need to fight tough competition, they have a lot of room to cut. They don't pay a dividend but do a tiny bit of buybacks, something less than 2%. Again, not the time now, but in the future this can get similar to Nike. But judging by this and the plan and the way the company developed so far, I'd say this has a good management team, which, I'll argue later, isn't the case for Nike. Financially, they are in a very good position with enough current assets to cover all the liabilities. You can see that they don't have long-term debt, so in the future this can be a way to fuel the company's growth at something like 3-4% interest or even less. Even a couple billion is like 3 years of high capex, so that can do quite a lot. Plus, they can also issue stocks if they really need it, so there are a bunch of cheap ways for them to raise capital and fuel some growth. But that's up to the management and something we would likely see after the current investment cycle. Now, obviously, the competition is probably the number one issue. You have huge companies that can just copy what Lulu does and be pretty much guaranteed to steal market share. There is a tiny chance to see someone buy them unless it's something like L'Oreal, which would fit them, or another huge company. Even with Nike, I think it would rather be called a merger, not an acquisition, because Nike is like 3-4 times the size. Whatever company buys them would probably value them as a higher growth company since they are in the middle of an international expansion, so it's likely to see them pay quite a bit. But they don't really need anyone to buy them, they can do totally fine alone. Of course, the market is very different than when Nike expanded so much, but these companies still managed to grow to around a fifth of Nike's revenue and a fourth of the cash flow, which is incredible. This is in itself a very popular and actually beloved brand, and they still have that international expansion potential, which is pretty much gone for Nike. If Nike was such a powerful competitor, how come they didn't stop them from doubling the revenue in 2 years and probably triple it in a couple more? This is why I think that a new management team for Nike that actually does something with the money instead of buybacks to grow the EPS, because otherwise it's pretty much flat or negative, could be great for them and potentially terrible for Lulu. You can see Lulu's development as a failure of Nike's management, and if they couldn't beat them, why not at least try to buy them? Again, I think the current management relies way too much on Nike being Nike, even if they didn't play such a role in that while enjoying some massive benefits. But with such a company, keep in mind that the power of the brand is a huge factor to their success. If they lose that customer relationship or they get into scandals and deteriorate it, that can have a deeply negative effect, so marketing will be very important. Now let's get into a valuation. In a bad scenario with higher competition, let's say they grow the revenue at only 8% per year and convert 10% into cash flows. For a company in this stage of expansion in this environment, that's quite a low growth rate. That's 14.1 billion in revenue, meaning 1.4 billion in cash flows. For a ratio of 15, which could be okay to reflect the market's disappointment but still seeing some potential, that's a market cap of 21 billion. That's a price of 171, meaning a 30% loss. But at such a market cap and with this balance sheet, this could be a brand that Louis Vuitton or L'Oreal might want to buy and help grow a bit better. These companies pretty much rely on acquisitions to grow, and this could be a good one to add to the portfolios. In a second scenario, let's say the growth slows down to 12% and they have the same cash flow conversion as Nike, meaning around 12%, so less than today. That would be 16.95 billion in revenue in half a decade, meaning around 2 billion in cash flows. For a ratio of 20, similar to Nike today, which is seen as pretty low in this market, that's a market cap of 40 billion and a price of 326. That's pretty much a 30% profit, and this scenario is pretty pessimistic given the upcoming environment. In a good scenario, let's say they manage to keep delivering some 15% revenue growth per year and they keep turning around 15% into cash flows. This isn't really impossible with higher consumer spending and international expansion, especially if they get some debt to develop. In half a decade, that's 19.3 billion in revenue and 2.9 billion in cash flows. Assume a ratio of 30 and that's a market cap of 87 billion, meaning a price of around 710 for pretty much a 3x. Plus, they can easily pay some 4-5% dividends since they don't have interest to worry about. I made a video where Lulu was one of the 3 companies that I'll probably buy soon, and I already bought one, so make sure to check it out as well. In my opinion, this is a mini Nike that's in a similar position to them 1-2 decades ago. Sure, the environment is different and the competition is much tougher now, but I'm not expecting Nike's previous level of growth. That's pretty much buying at something like 450 in 2021. But they are addressing a high potential niche with products that people love and are in the middle of international expansion with a solid plan, so decent growth shouldn't be impossible. Nike, by the way, currently doesn't grow, and I think the best thing that can happen to them is a management change, similar to Starbucks. It's a good company, amazing brand power, very good financials, but they seem to be lacking a clear plan to develop and just count on Nike being Nike forever. It would be a shame to waste such a company. Especially with Nike in its current state, I think Lulu can definitely grow. Sure, not 30-40% per year, but 12, 15, maybe 20 can be achieved. Overall, good company, nice financials, and I think it's one of those cases where it wouldn't take much to see them do well. With rate cuts increasing consumer spending and the discretionary budget, this can have yet another rise. I wouldn't call it a buy now because it's getting back kind of above a fair value for me, but if I get it at something like 200 or a bit above, I'd very likely buy. I think in that case, the downside would be pretty limited thanks to a potential buyer, while the upside would look very good. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.